Okay, welcome back. The pre-open session is right in front of us. SGX is indicating about a 30-odd point lower start. Anuj is here with a quick look at how the trade setup is this morning. Sensex hit a new high, Anuj. I mean, we're waiting for. I just want it to happen and be done with it.
Yeah, it will.
So close and waiting for it.
It will, Prashant. If not today, maybe in early part of December series. The only thing is it's a 5-week series, and I've noticed one thing that 5-week series normally have some volatility in the first 2 weeks. And in any case, the series starts on a very heavy note with 82% rollover in Nifty and FI long exposure at 77%. So in itself, of course, that's not a negative. But if a negative were to hit the market, then the market perhaps is not well hedged for that kind of an event. Globally, of course, cues look very strong. The US bond yield 10-year is now 3.67 versus peak of 4.34. Combination of that plus crude, etc., is clearly telling you that the US data is very supportive of that IT rally that we spoke about yesterday as well. And for me, that really is the index to track. If that can extend its move, it's very close to its 200-day moving average. The Nifty might just consolidate ahead of fresh all-time highs. And maybe take them out in the December series. The base for Nifty has now moved up to 18,250, which was the spur resistance. If you're a day trader, though, 18,350, 360, the near-term resistance now becomes your support level. The Bank Nifty, of course, still remains the strongest index. The move to 44,000 may have opened up after yesterday's move. And HDFC Bank is leading the charge. 12% rally this month in HDFC Bank, something unheard of. And there's a lot of FI buying clearly happening in that stock. So that's something to track perhaps as well.
Okay, all right. Anuj, thanks so much for stopping by and giving us a quick view on the index. Chandan Taparia as well joins us at the start of this new series. Well, Chandan, how is trade set up at the start of the series? And also run us through how would you approach the market? What are the strategies you have?
Good morning, Nigel. Thanks for having me. We have seen a good run-up and good so on the last day of the November series where Nifty rallied by more than 200 points. If I look at the rollover data of the Nifty, that is near to 82%. Which is much higher than the last series rollover of 76%. And important part is the roll cost is 0.90%. So around 119 bips is the roll cost, which clearly indicates that long aggression is visible in the market. Apart from that, if you look at the OI, that is near to 12 million shares for the Nifty. An important part is FIs are again long in the market. Their long short ratio in index is near to 77%. Volatility index, which is continuously falling down for last 9 consecutive weeks, and I have never seen before that volatility is continuously falling in such streak. So lower volatility with stable put call ratio, better FI long short ratio, and better rollover clearly indicates that we are all set to head towards the much higher levels. So on positional point of view, 18,250 is the support. Any decline could be the buying opportunity, and we are looking for a fresh lifetime high of 18,605. And finally target towards 18,881 in the Nifty index. Now talking about Bank Nifty index, here we have seen rollover of around 88% with roll cost of 0.55%. An interesting part is 74% fresh long added into this series, and now total OI is near to 33 lakhs. So huge longs were added in Bank Nifty, and it is up by around 4%, which clearly indicates that outperformance and momentum could continue. So we believe that with support of 42,500, Bank Nifty has potential to move towards 43,750 to 44,000 marks in next couple of days. Now looking at stock specific, positive on the HDFC Bank. HDFC Limited has seen the good short covering, which also supported the index to lead the move towards 18,500 zone. This stock has seen the 92% rollover, consolidation breakout is visible. Put writing with better roll cost clearly indicates uptick in the counter. So recommending to buy on HDFC Bank with a stop loss of 1605, and here we have a target towards 1700 to 1710 on the upside. Second trading idea, that is from the IT pick. In the last trading session in last hour, we have seen huge short covering in the IT counter, and TCS is one of the counter which is continuously moving upwards from last 9 consecutive weeks. And 96% rollover in such heavyweights with long built up clearly indicates uptick could be seen. So short covering and now long built up could take it to higher level. Recommending to buy with a stop loss of 33.30, and here we have a target towards 35.50 level. One can also go with buy call or bull call spread in TCS. Last trading idea, that is from Sun Pharma. 93% rollover, surpasses falling supply trend line after the consolidation of last 2 weeks. Now again it is moving upwards, giving a consolidation breakout. So we are looking for an upside move towards 1080 and recommending to buy Sun Pharma with a stop loss of 1020 here.
Okay, Chandan, thank you very much. It's always a pleasure getting those ideas from you. Appreciate your time here on the channel. Now, Momentumizers is next, and this is always an interesting segment. Today, HAL, Hindustan Aeronautics, is in focus. Vahishta is standing by to tell us why. Vahishta, over to you.
Hi, Prashant. I'm watching out for Hindustan Aeronautics because the stock has had a phenomenal run in this year. The stock is up 9% in the past 1 month and doubled in the past 1 year. The current market price at 2,728 rupees is just less than 1% away from its 52-week high. Also, yesterday, the stock ended higher than its 20, 50, 100 and 200 daily moving averages. The average trading volume in the past 10 days is also in upwards of 17 lakh shares. The street is quite optimistic on the growth prospects of the company. Post their Q2 numbers, when we had hosted the management, they had mentioned that post there is an upward revision in the EBITDA margin guidance from 24-25% to 26-27%. So positive there. Also, FY25 onwards, the revenue growth is expected at more than 15%. Remember, this is to be compared with FY22 growth, which is in single digits at 8%. Also, there's a healthy growth in upwards of 90,000 crores. So I'm watching out for this stock. Back to you.
Right. Thanks a lot for that, Vaista. Yeah, the management sounded very, very confident when they joined us a few days ago in terms of margins. They also said that going ahead, in the next couple of years, they'll start growing in double digit. Near term, they'll grow in single digits out there. Mitesh, this one's been on a tear. HAL, what a brilliant move. What's your view? I mean, technically, is it looking good for more?
Yeah, it's been on the recommendation list quite a few times in the last 15 days. Obviously, I think one stock which is making new high has no historical resistance at higher levels, remains a very strong buy. But for the time being, mildly overbought. So maybe a pullback to about 26.50 zone would be a welcome buying opportunity. But otherwise, it's clearly for long-term people who are looking at a 6 months to plus kind of horizon. I think this remains a buy. I think I would look at targets in excess of 30 to 50 here.
Okay, all right. Well, higher levels coming out there. Well, pre-open, the rates are all over the place. We have a few minutes more. But for the time being, it's indicating that we're likely to get closer to that. I'm not sure whether or not that will happen, but it's indicating a 70 to around 80 point bump up after seeing the big surge that we saw yesterday. So let's see whether or not that does happen. But we've still got a couple of minutes more in terms of, the Nifty stocks that are opening up well in the green. Well, HDFC, that big point there, that's one of the key reasons why the stock is, why the index itself is high. So Prashant, let's see. Santa's coming to town, looks like.
Nigel, the rupee and what it is doing is interesting, right? Because let's have the dollar rupee up on the screen. It was weak yesterday, and this, by the way, day before yesterday, oil had that 4.5% slide. And typically, the move on the currency is one is strengthening, right? I mean, the rupee would strengthen a little bit, but weaken. It fell about 10, 11 rupees, even as the market surged. And this morning, it is opening kind of flat. So we'll see where this one is headed. This is also an important kind of sentiment cue for stock markets per se. But I think we've got the management of Capri Global now joining us. Capri Global Holdings Private Limited has bought around 19 lakh shares in Fino Payments Bank. Rajesh Sharma is managing director at the company. Is joining us right now. Rajesh, great to have you with us here. Good morning. We had the management of Fino Payment Bank yesterday, and we asked them, the CFO of the company, what Capri was doing buying into Fino. They said it's largely tie-ups and, there's nothing strategic about it. It's not as if they're going, you guys, Capri is going to creep higher, require a significant holding, at least not right now. Can you tell us, I think you're the right person to put this to, what are your intentions? Market's taken note, Fino Payments Bank has jumped, the stock has jumped, but what are your intentions?
So we have bought this share not in the listed entity. These shares have been bought in our investment arm, which is from family office. And from that office, we have a separate team which identify the opportunity sometime for trading purpose, sometime for short time, sometime for long term. So I think this is part of that. And that is looked after by separate team, and I review once in a quarter. And there is no strategic intent. This is purely from the investment or trading perspective.
Hi, Mr. Sharma. But it's clearly the street has taken note of it. You have spent 40-45 crores in 2 days to buy these shares of Fino Payments. I'm just wondering, the investment arm, they could have gone ahead and bought 0.3% in Capri Global itself, right? That would have come to a similar amount.
So I think we are already there about 74.7%.
Yeah, I'm telling you, sir, it's 0.3%. 0.3%, the similar amount you would have spent, you would have gone to around 75%. The problem is, I'm just wondering if there's no strategic tie-up, then you're more bullish on Fino Payments rather than the own company. Give us the rationale.
We have increased our stake, if you remember, from 55% to the current status. So it is not that we have not done that. And in our investment, we normally make investment in any company between 25 crore to 100 crore. So this is not the first time we have done it. We have done in past in many companies. We have bought the positions. We have exited sometime in profit, sometime in loss, depending on the situation. And this is what we on regular basis invest in the companies.
Okay, so to clear the air, you're saying there's no strategic tie-up. It's purely a trading or an investment that you have made in Fino Payments, right? The investment arm of Capri Global.
Yes, absolutely.
Will you buy more? The last 2 days you have been buying.
Depending on the price, depending on the price and depending on how we think it. So it's difficult to say.
Okay, price has come up from the first time that you bought. Rajesh, is this a trading position or an investment position? Do you plan to hold or you...
I think so far it is a trading position. Trading means we don't have a long-term view.
Right.
And just to clarify, we did not had any meeting with the management of Fino. We did not met them. Normally, when you do the strategic tie-up, you have round of discussions.
Right.
You enter into some sort of understanding.
Right.
And you execute some of the memorandum. So there is nothing sort of that happening.
Okay. This trading, usually, this is a family office, right? So this is your money. When you say it's a trading position, what is the time period? Do you hold usually on your books for a month, 2 months, 6 months?
Sometimes 3 months, but sometimes 6 months, but definitely less than a year.
Less than a year.
So there's no strategic tie-up with Fino Payments?
Absolutely not.
And they said they were open to strategic tie-up actually. So that's why we wanted to clear the air out there, but not with y'all. This is a pure trading position. Okay. If not, with Fino, will you see yourself with any other payment company, some bit of a tie-up or strategic alliance, or are you fine by yourself? The listed entity, because now we're talking about the listed entity. The investment arm, we got their strategy. It's a trading position. They may or may not buy shares. But for the listed entity, what were you likely to do?
So then I would like to clarify that what we are doing in listed company is we are lending to MSME customers, which is collateralized, and average ticket size is 17 lakhs, and that we are doing through about our 150 physical branches. And same we are doing our home loan, affordable home loan through these 150 branches. We have about 300 plus branches dedicated for the gold loan, where we do the gold loan. And construction finance is done from the 5 or 6 regional offices. So this is our mainly 4 lending product. And anybody we tie up in future will be depending on who can contribute to the lead or some sort of facilitation of either client servicing or client origination on these are the segments. So I do not think that payment bank can contribute towards any of that.
Okay.
So so your question, will we open to anybody in future for tie-ups? Yes, we'll be open anybody who can in some way help us in either origination or maybe collection or maybe some other aspect.
Okay, you briefly mentioned gold as a part of your portfolio. It's very small, and you were talking about large numbers. Do you end this year with the gold AUM at around 1,000 crores?
That is the target.
1,000 crores order. It's been good speaking to you, Mr. Sharma. Things still a little wibbly wobbly, but you're pretty clear that this investment that the investment arm of Capri Global has made is purely a trading position. There's no intent out there in terms of any strategic view. So we'll hold you at that, and we'll wait by for the large trades at the end of today. Last couple of days, you have been sneaking in there. Let's see whether or not, there is more shares that you have appetite for. But as you said, depending on the price. Well, let's move on then. Let's get Mitesh back on. Mitesh, the start is in the green. Tell us what's your 9-10 call?
I'll go with the buy on HPCL with a stop at 217 for targets of 232.
Okay, all right. Sorry, which one was that, Mitesh? HPCL. HPCL. Okay, got that. Sonal is standing by now. Axis Bank held an analyst meet, and she's here to apprise us of the key takeaways. Sonal, take it away.
Well, interesting takeaways from Axis Bank analyst meet that happened yesterday. The big focus, of course, was digital by the bank, where they said that investment in digital platforms is boosting cross-sell opportunities for them. They also spoke about the fact that with coming in of Citi and Flipkart partnership, it will be among the top credit card platforms in the country as well. Delinquency, those levels remain below the peer private bank average in the retail category if we compare it with the bank, and asset quality, according to the bank, continues to show sign of improvement. Stronger provision buffer is there to support any sort of macroeconomic headwinds if we see any of them here. Jefferies has a buy target on the stock with a target price of 1,110 rupees per share. Valuation discount of 40% to ICICI Bank, according to Jefferies, should narrow a bit, and capital raise is something that we'll be watching out for. UBS on Axis Bank have a buy rating, target price of 1,030. Bank reiterated the medium-term loan growth of 5 to 6%, which is higher than the industry. They also expect valuation gap with the peers to come down as far as Axis Bank is concerned. JP Morgan has an overweight rate, and they have a target price of 990 rupees per share.
Okay, thanks a lot for that, Sonal. Well, let's hop across to Parikshit. He's joining in to run us through the key takeaways from Suzuki India's business briefing, which took place yesterday. Hi, Parikshit.
Hi. Yes, some important details coming in from the management. The management briefed analysts and said that they are looking at ways to recoup their market share. Remember, Maruti's market share has come down to 41.8% from 45% a few months back, and that's what they're trying to do with ramping up their SUV portfolio. The good news for Maruti Suzuki right now that they have received around 80,000 bookings for the new Vitara, 170,000 for the Brezza, and in the Auto Expo they will be launching, or showcasing rather, two new SUVs. The Thar rival, which will be the Jimny. It will be a 5-door Jimny that will be launched at the Auto Expo. You'll also have a rival to the Sonnet and the Venue. A small SUV will be showcased, and both those cars will be launched in the Indian market commercially between April and July next year. So there will be 4 SUVs in Maruti's portfolio. Clearly they need to do more, and the management is also saying that they are trying to ramp up production capacity, focus on exports, and grow market share here on.
Well, this starts in the green. We're up close to around 20 points, but as expected, that's seeing some bit of a resistance. Remember, the final hour of trade yesterday was very, very good, but because of some averaging, we ended a little below that 18,500 odd mark. So things taking shape as we speak. What's doing well in trade today? Well, you have PB Fintech from the broader markets that's flying away. That's up another 4% odd. But from the frontline indices, the reason that we're holding in the green is a couple of these banking names are doing well. Axis Bank post that analyst meet. Well, that's up close to around 1% or thereabouts. HCL Tech up close to 0.5%. And L&T up close to around 0.5% odd. On the flip side, Power Grid, BPCL, both of them are pulling back a little bit. And Divi's Laboratory as well, that was flirting with the 52-week low. Well, that's down close to around 0.5%. But clearly the actions in the broader markets, PB Fintech up 3.5% now. GSPL, well, that's up close to around 2%. PNB looking at selling some part of the non-core investment that they have in UTI AMC. So that as well is up close to around 2% or thereabouts. On the flip side, well, you have a couple of those other names. Lupin, that Mandirdeep facility, wrap on the knuckles out there. That's down close to around 1%. HPCL is down close to around 1%. And AU Small Banks up down close to around 0.5% odd. As we speak, on expected lines, the Nifty is down close to around 10 to around 15 points or thereabouts. So we have corrected close to around 50 points from the opening tick. Nothing really to worry. It'll be par for the course. The only problem is the FIs, the clients, everyone is net long. So, that's the only word of caution. No one's expecting a bit correction, but a 100, 200 point correction, well, that'll be par for the course. Prashant, so a stable opening is what we'll say.
Oh, yeah. I mean, but to get to within 100 points of a new high and then pull back again, I mean, it's something to watch. But it's kind of flat again. I mean, the market started with a higher, and then, it would have been much better if you started a little lower and then moved up. But that's the reverse of what's happened now. Just a few names. I mean, so let's put up Infosys, TCS, HDFC Bank, and Reliance Industries. These are the 5 names which contributed about 70% of the push higher yesterday. So today, not very much. I mean, and the push all came after 3 o'clock. We'll see if there is this impulse towards the end of the session, or even maybe earlier than that. But for now, not very much at all. The broader markets, I mean, apart from what Nigel has already kind of alluded to, let me just see if I can pull up a few other names. It's still early, and I mean, I think volumes are still picking up, etc. So we'll have to give it some more time. And I guess we'll come back with more names in a bit from Nigel.
Just one more stock, ITDC, with regard to the Ashok Hotel. Well, the government has fixed around 7,400 crores as the indicative value for the hotel. We'll have to see how much they get, but that's sharply lower. You know, the reserve price is sharply lower. Indicative price is sharply lower than what is much higher than what the current market capitalization is. So otherwise, a lowly traded stock, not a lot of liquidity. But for the time being, the street has taken that up close to around 7 to around 8%.
Okay, and we'll kind of look at that. We, by the way, put that question to DLF. I remember when the management had come in. DLF, of course, is one of the, perhaps an interested party, etc., but not very much clarity at that point in time. We'll look at more stocks in a bit from now, but Pramod Gubbi is a market master of the day. He's co-founder at Marcellus Investment Managers. Pramod, great to have you with us here on the program. Thank you very much. Slowly but surely, the index is heading to new highs, Pramod. How are things looking overall? And from the last time that we spoke, are there any sort of big portfolio ins and outs that you've made?
Thanks for having me here. Always a pleasure. Yeah, so from a macro perspective, I think we've been talking about how India is standing out in the global situation, both from a capital flows as well as FDI flows perspective, partly because some of our own fundamentals are stacking up pretty well. At the same time, because of various geopolitical issues, India is seen as the most favored market and economy to invest in. Because of that, I think the flows this month are pretty much in line with the rest of the emerging markets back. We are not seeing a significant shift towards India yet. Perhaps that's a 2023 story. But like I said, it's not just the capital flows. Even on the FDI side, you should expect significant investments coming in. So that's the brief on the macro side. From our perspective, like we've always discussed, Prashant, we don't change much too often. So I think since the time we spoke last, I don't think we've added nor exited anything of note. But the theme remains the same. We still worry about inflationary pressures coming in, although across commodities there's been some cooling off. But given the geopolitical situation globally, we reckon one should be prepared with companies in the portfolio which have pricing power, which are able to withstand a pretty impressive, I think.
Okay, all right. Hi, Pramod. Good morning. Nigel on this side. But do you think we're running ahead of ourselves on the headline index itself? The challenges still persist, maybe on the trade deficit front and valuation-wise as well. But what's your take?
No, absolutely. I think if there's one concern from a macro perspective, it is around current account and the fiscal deficit as well. And both are related to the commodity price inflation, which is why I stack that up as the most important risk that investors need to look at, whether you're a macro investor or a bottom-up investor. That's one thing that beyond anybody's control. You have the war situation persisting, so that's adding forces. Potentially a China opening up, although it looks unlikely now that the cases have gone up. There could be more stringent lockdown, but if China opens up, that will create its own demand pressures on commodities and prices could go up. So you're absolutely right. If there's one sort of dark cloud on the horizon for the India macro story, it is the current account and the fiscal deficit dealt by commodity prices. Valuations we are less fussed about. Clearly India's superior valuations to other emerging markets are justified by the better quality companies in the Indian index. Return on capital simply is significantly greater than the ROCE for other peers there. And speaking to Western allocators, we do sense that they do recognize. Of course, there is a school of thought which says that, look, despite all the problems in China, China is extremely cheap. It's in the price, but I think there are longer-term perspectives being built, where India is considered as a more stabler economy, more stabler market to invest in from a private capital perspective. And that flow will come in irrespective of the valuations. I think people will see through the headline price to earnings multiple, but more than the valuation, I would think the commodity price inflation is a bigger risk for the India story.
All right. Just a few other names, Pramod, stay with us. Just coming to you, look at Paytm. It's coming up about 3.5%, 456 on Paytm, and looking up. There is PNB, Punjab National Bank, which is now the top volume-led gainer. It's up 2.75%. IRFC, the railway finance company, 3% higher, 32 on that one. RVNL is up 3%. So there's, some of these themes are continuing. Escorts is up 3.5% plus now on decent-sized volumes. There is RBL Bank, which is starting about 3% higher. Timken, which had a pretty good run a few days ago, that's up 4% at this point. There is UTI AMC. I mean, I've not seen this on the top gainers board for a while, but that's starting 6% higher. Is the cheapest asset management company, of course. CET is up about 4%. So, I mean, there is a fair bit. Nigel already mentioned ITDC, which, of course, continues to be up and about. Market breadth is pretty decent, not quite 3:1, but close. And that's the lay of the land. 26 points lower, though, on the Nifty at this stage. Pramod, have you or your team given these new economy names a look? Because stocks are down, in some cases, 70-75%. I mean, 0.25% of the value they started out with. Life is listed entities.
Yeah, I mean, we have looked, we do look at every opportunity that comes our way. But other than maybe one, we haven't been particularly impressed, more from a fundamental perspective. Valuations aside, valuations will come to later, but from a sustainable competitive advantage perspective, there aren't that many that appeal to us. The only one that we've gotten close to looking at is Nykaa, where we do think that it's fundamentally a good business. It has been built not just from funding from venture capital. In fact, a lot of it has been built with very little capital infusion, which appeals to us, where you build a business which can generate lots of profits, which can in turn fund its expansion. Having said that, we're still not comfortable on the valuation front, but that's the only exception which has been on our radar from the new age companies.
Pramod, you mentioned Nykaa, that you'll have got close to looking at it at least. What about Zomato? They're gaining market share from Swiggy, a couple of reports indicated, and maybe that pricing war is ending, so then profitability will slowly start showing up. You haven't looked at that?
Not really. It hasn't passed our filters. Like I said, we need capital efficiency. We need to show that unit economics are derived without funding. So, which is why Nykaa stands out. It is not a loss-making story, much like the others. We need to see a fairly long enough period where businesses can sustain without having to fund operating losses, because that's foremost as part of our investment philosophy. It could appeal to other investors, but for us, we need a reasonable amount of cash generation in the business, and show that the business can grow through internal accruals without having to dilute through external infusions, which obviously is detrimental to minority shareholders. That's where I don't think Zomato has passed the screen at our front.
Okay, it's not past the screen. Okay, fair enough. By the way, on Nykaa, Pramod, do you already own the name?
No, we don't own Nykaa yet.
But you said you got
close. Like I said,
you got close to kind of the closest, which kind of fits something you may want to buy.
Like I said, we have a set of screeners. Okay. We do need that cash generation. That's the only one amongst the new age IPOs which is past that. But there's a lot more work to be done. Like I said, valuations are still not comfortable. You do need to get comfort that the business can grow at healthy pace for long periods of time. The business has had a very short period of history, not more than a decade. So we'll perhaps observe it for a longer period before we get to that stage.
All right, Pramod, requesting you to just stay with us for a couple of minutes. We're coming right back to you. Santosh Nair as well joins us in the studio. Take us through the timeline issue with bonus shares and what market players have to say about this. Well, Santosh, you're tracking a couple of these companies who have been in the news as well. Tell us more.
Well, right now there's some kind of ambiguity in the wording of the rule as far as the credit of bonus shares to the shareholders' demat accounts go. Most companies typically tend to do that within 15 days, but again it varies between companies to companies. In some cases, even the credit of bonus shares have gone beyond 15 days. So typically what happens is that it sometimes creates a window of opportunity to some people to put up the price simply because there's no floating stock in the market at that point in time. The shareholders are still to receive that bonus shares, and because of which it does happen. I'm not saying it happens for all the companies, but there are definitely companies which try to capitalize on this and try and mark up the prices of their shares.
Okay, so the regulator is looking into it, is it?
Well, market players have been saying that there should be a certain cutoff date, in the sense that there should be a fixed rule. You should credit the shares within a certain number of days. There's no reason why it should take 15 days. So if you say for something like even as complex as an IPO, the shares are credited within 10 days. So in bonus shares, why not? Already the company has a list of all the shareholders, and they should be able to do that quickly enough.
And is this, Santosh, based off any particular event or anything that they're looking at it? And should we, are we to expect something soon from the regulator?
Well, the matter is under consideration because there have been at least quite a few traders that we've been speaking to have been saying that, that there are sharp price swings as soon as the bonus issue is announced, typically in the days following the record date when there is very low liquidity. And since they don't know, they don't have any clear idea of when the shares are going to get credited, they can't even probably even hedge their position. This now it's a free market at the end of the day, but there is definitely an asymmetry here due to the ambiguity in rules.
Okay, all right, Santosh, thanks a lot for stopping by and giving us that quick update. We'll wait by to see whether or not something is done about that and clear out these loose ends as well. But Pramod, thanks for waiting by. Coming back to you, you know, the consensus trade this year has been banks. The FIs, they were selling at one point of time and they were knocking back these banking names. You have liked a couple of these banking names, and I think you've been leaning towards the private financials and private banks. What about the PSUs? They have been the space where the big money has been made. Valuations not a reason enough for you to buy them?
Well, so like I said, one part of our investment philosophy is to look at long track records in history, right? And the PSU bank sort of falls short on that front. Now, it could be changing going forward. There could be a new story written by PSU banks, in which case we're happy to wait. We're happy to wait to see that there are structural changes in the PSU banking structure, that the problems of the past won't recur. If there's enough proof, and remember, we haven't seen the beginnings of a credit cycle yet. We need to see an entirety of the credit cycle to see prudence in terms of lending quality, and that figuring out when the economic cycle turns downwards, do you then see a shoot up in terms of NPAs? So we'd be more than happy to be proven wrong, but we'd like to see that one full cycle before we change our minds on PSU banks.
All right, we'll leave it there, Pramod. Thank you very much for your time. Great speaking with you as always here on the program. Appreciate it very much. I mean, the market is absolutely flat, 8 points. I mean, neither here nor there. 18,477 is where the index is at. We've been highlighting sort of stocks and sectors which are moving around today. Paytm, PNB, the railway stocks, Escorts. I mean, this list has not changed. Maybe we can put up Max Health, which is a new one which has come into the mix. It's up 3%. That's the hospital chain. We've got Indian Overseas Bank. We've got a bunch of these PSU banks which are coming, which are sort of starting to fire as well on the upside. Market breadth is still pretty positive. I mean, you know, overall, all said and done. Bajaj Finance on the downside big, with volumes. Power Grid, all just 1%, 1.25% cuts. Asian Paints, Cipla and Adani Transmission and Adani Green. These are stocks which are lower at this point. Still early days. I mean, just what the first 15 minutes or so of trade. Now, Dixon Tech stock is down around 20% this year. How is the business environment looking? The last when we had spoken with the management, they had, of course, expressed concerns about the overall, rate of growth which the market was expecting, perhaps, which needed to be brought down a little bit. The global smartphone market, by the way, has also been falling amid, and of course, muted LED TV sales has been a point of concerns as well. Saurabh Gupta is Chief Financial Officer at Dixon Technologies. He's joining us to take some questions. Saurabh, great to have you with us here. Thank you very much. Can you tell us what's the situation now? Are things a little better? I mean, well into the third quarter, or in these two segments, phones and LED TV, sort of TV sets, things are still looking a little tough.
So we had a very good sales during the festive season. In fact, our quarter two numbers, we had shown a very good growth. Immediately after Diwali, I think so. It's always since there is always some inventory in the channel, so it takes some time. But speaking to the customers, we have a very strong order book starting December onwards, and I think so. So the business is almost back to normal. The commodity prices have come down, so there's a positive impact on the margins, especially in our ODM business. And now your point on the TV sales. So my sense is the TV sales would be lower because it's a prescriptive business for us. So if the prices of the commodities correct in the international market, that gets reflected in our sales. But our volumes this year will still grow by 20%, despite a very small growth in the industry this year as far as TVs is concerned. We will still end up showing a 20% volume growth on the volume side.
All right. In absolute terms, what would that number be, sort of? 3.6?
Yeah, 3.6 million as against 3 million that we did last year.
Got it.
And despite growing in single digits or flat kind of a growth this year, we will still end up 20% growth on account of higher share of wallet from more existing customers.
Okay.
And also customers on board.
All right. And you're saying that there's no cause of concern with regard to demand, because the concern was that the mobile business in particular could see some bit of a headwind. You're saying as of now, that's not the case.
So Nigel, on the mobile side, we are seeing some kind of a muted demand this quarter four. Overall, it's expected that this calendar year will see a 8 to 10% degrowth in the mobile business, mainly on account of the global headwinds, also the inflation concerns in India, of course, the rising food prices, the customer share of wallet shifting to more hospitality and traveling. So yeah, mobile has been relatively slow to our expectation, but the other verticals continue.
Oops. Okay, all right. I think we'll try to reconnect with Saurabh, but that's a bit of a worry actually, because mobiles was the space where they're talking about ramping up considerably, but we'll wait to reconnect with Saurabh. Saurabh, you're making that point. The street is banking on the mobile business scaling up considerably, but you're saying in the near term, demand is a little muted?
Yeah, so quarter four, the demand was slightly muted as far as the domestic market is concerned, as far as the global markets are concerned on the mobile side. But clearly, we are seeing, as far as whatever interaction we are having with the customers, we are seeing a decent order book starting Q4. And of course, all these brands are also working on the next year plans. So we are hopeful that next year our volume numbers should significantly pick up.
You want to give us a couple of numbers out there? What do you end this year with in this mobile business division? And where is it headed? Because that's been growing very well. As you say, the industry is slowing down itself. So it's some targeted number. What do you end this year with? What are you looking at in next year?
So Nigel, we are in advanced discussions of closing some large customer accounts in mobile business who have a very strong market share in Indian market. Of course, so that would depend how much they are able to contribute in Q4. But my sense is, even on a conservative side, last year we did somewhere around 2,800 odd crores. My sense is there should be a 50% kind of a growth, 50-55% kind of a growth this year as far as mobile business is concerned. And you are absolutely right. This is the single largest piece for us.
50% volume growth or value growth?
Value growth.
50% value growth. And you said 20% growth in TV sales this year, which
in terms of volumes, but in terms of revenues, it will be nominal growth.
Because the commodity prices kind of seep through straight away.
That's it.
Right. So overall, what will the numbers look for you for this year?
So we stick to our guidance. I think so. It should be somewhere around 14 to 15,000 odd crores.
15,000 crores, right?
14 to 15.
Because earlier you were talking about 15, so I don't know where this 14 is coming from. So 15, we should work with that, right, Saurav?
There are a lot of moving parts right now, but I think so. Yeah, it should be in the range of 14 to 15,000 crores.
Okay, all right. And the margins, you still can hold on to that 3.8 to 4%, which was earlier scale back, right? To that vicinity.
My sense this year it will be somewhere around 3.8%, Nigel.
Okay.
Next year we're confident that we should take it up to more than 4% on account of operating leverage, migration to our own design solutions, and more backward integration.
Okay, all right. Saurav, in the past, the management has spoken about the export market being a big market, and there's tremendous potential out there. As of now, I think it's still not too big a contributor. If you could give us a sense, what is the contribution out there? In the past, you'll have talked about 35 to 40% of your business coming in from the export market. A couple of reports I can see, news-based reports. So what is it? Where is it headed? And in particular, the lighting business. There's a big scope, right, out there. How does, for the lighting business, the export division shape up? Go ahead.
Yeah, so lighting business, we started with executing a first order to the UAE markets for LED bulbs. And we are in advanced discussions or basically in final stages of closing some large accounts for global markets. So we're working on some large RFQs there for our anchor customers. And those in itself can be very big in terms of revenues. If you look at our last year export revenues, out of 10,700 crores, we did somewhere around 700 crores worth of exports, mainly the mobile segment for our anchor customer to North America markets. I think so this year out of 14 to 15,000 crores, we'll end up doing somewhere around 2,500 to 3,000 crores. Significantly led by mobiles, and then the small portion would come from lighting. We see that there's three segments: mobiles, lighting, as well as washing machine. I think so would start contributing significant portion to our export revenues in the next coming years, because a lot of discussions are happening. The whole China plus one, the international companies clearly looking to diversify beyond China, and India is of course it's a good market to take up with that business because of the strong policy framework by the government. So if we maintain that in next couple of years, at least 35 to 40% of the revenues can come from export markets.
Oh, that's big. I mean, this year's jump is also big. I mean, what, almost 4 times, 22 to 23 jump in exports, and you're saying 35 to 40% of total business in the next few years can come from exports.
On a much higher base. On a much higher base, yeah.
On a much higher base, yes. So the numbers will be even larger. Just one follow-up on that. You know, we've been hearing this China plus one, of course, is we've been hearing for some time. But there is also on the other side talk of onshoring, nearshoring, and things like that, right? Having supply chains closer home. Is that only for? I mean, does that? Any thoughts on that? Does that impact your business? Could that kind of hit your momentum, or you think, I mean, the numbers are just too large, the market size overall is just too large, so it doesn't make a difference?
I think so the opportunity size is very large. India has its advantages of a low labor cost. Power situation is much better in India. And of course, the strong policy framework led by this PLI scheme of the government. And clearly that are very big advantages. So my sense is India will definitely emerge as a strong manufacturing hub, not only for getting the big domestic market that India has, but also global markets. So India is sitting on a very big opportunity right now.
Okay, all right. Saurav, just to confirm the point about mobile business, which is growing well. Last year, you did around 2,800 crores, 50% growth. You should end the year up in the vicinity of around 4,200 crores, right?
My sense, it should be slightly higher. It should be somewhere between 4,500 to 5,000 crores.
4,500 to 5,000 crores. All right. And the industry is degrowing by 8 to 10%.
Industry has degrown this year. As per the estimates, I think so it has degrown by 8 to 10% this year.
Okay, all right. Just wanted to clear the air on that. What about the supply side? You know, in the past, there have been some supply side issues, but that was gradually getting ironed out. So demand could be strong, but on the supply side, supply chain has improved?
Yeah, so supply chain issues are sorted out. Commodity prices have come down by 30-35%. But we are really watching this whole situation in China very closely. There's the whole zero COVID policy, the number of cases spiking up in China. As of now, we are very much stocked up for the next 2 months of production, and we'll be able to overcome the supply chain issues. But yeah, if this thing continues to persist for some more time, I think so we can have some impact on our production in Q4. But as of now, we are fine.
All right, Saurav, thanks very much. We'll leave it there. Appreciate you joining in with all of that perspective. Always a pleasure. Well, the market is down 30 points. So, you know, it's basically, I guess, just biding time without very much to show for it. So, the advance decline is still 2:1 in favor of advances. So that is still holding very nicely And I think the stock which is emerging as the stock of the day, at least now, is Paytm, which is up a full 8%. So 473, 475 on Paytm. And look at that. That's coming up. Yesterday, of course, it was Policy Bazaar, which sharply rose. And today it's Paytm, which is coming up. Nykaa is another one, which I highlighted earlier, which is up about 3% or so. So a bunch of these names doing well. I highlighted C8 earlier. That continues to build on gains, almost 6% gains now on C8 at this point. We take a break here. A quick programming note, though. In a few hours from now, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective, presented by HSBC. Catch the on-ground event in the presence of Shireen Bhan, Managing Director.